Hello, good morning, good afternoon, everyone. Thank you for joining us today. We are very excited to be co-hosting a webinar with Founder Shield. We at Founders First Capital Partners have developed a really great relationship with the folks at Founder Shield. So we're really excited to kick off our first webinar with them on the topic of accessing alternative capital. And before I dive into the webinar and the introductions, I wanted to do a couple of housekeeping items. Please utilize the Q&A box or the chat and feel free to answer or ask any questions that you'd like, and we will answer those at the end. As well, we will be launching a poll during this webinar, so get ready to engage with us that way. And with that, I will kick off with a message from the Founders First Capital Partners CEO, Kim Folsom. She wanted to do the introduction in person, but unfortunately she is traveling out of the country, so as not to risk any issues with connectivity, we pre-recorded her introduction.
Hi, I'm Kim Folsom, the founder, chair, and CEO of Founders First Capital Partners. Today, I'm thrilled to join forces with Founder Shield for this impactful webinar focused on growth funding strategies for small businesses. Our shared mission is to empower and uplift small businesses to achieve their full potential. Having walked the path as a serial entrepreneur, I fully grasp the importance of essential elements such as know-how, connections, and patient capital in propelling businesses to the next level. At Founders First, we have meticulously crafted a platform that serves as a growth pad for growth-minded business owners, facilitating their journey to become thriving mid-market businesses. Thank you for gracing us with your presence today. This webinar will provide you with an invaluable opportunity to gain both insights into novel funding options that can fuel your future growth initiatives. We believe in equipping entrepreneurs like you with knowledge and tools needed to seize every opportunity that comes your way. On that note, I'm excited to announce an upcoming initiative, the Small Certified Supplier Funding Program, that will launch in August. This groundbreaking initiative aims to provide diverse-led companies with an ecosystem to access relevant capital, bolstering their business capacity to unprecedented heights. I encourage you to visit our website to learn more. At Founders First, we are passionate about forming connections, and we welcome the chance to engage with each and every one of you. Our team is committed to exploring how we can support your future business growth plans. Your success is our success, and together we can achieve greatness. Now, I'll hand you back to our esteemed webinar moderator. But before I do, I would like to express my deepest gratitude for your presence today. Your dedication to your business and your unwavering drive to succeed inspires us all. Let's embark on this transformative journey together, empowering one another and leaving a lasting impression on the world of business. And with that, I wish you continued success. Thank you. Hi, I'm Kim Folsom.
All right, thank you for that. And with that, I will turn it over to our presenters, Justin, who many of you know from Founder Shield, and then Casey from Founders First Capital Partners. Take it away.
Awesome. Thank you very much. As mentioned, my name is Justin Kozak from Founder Shield. I'm an executive vice president here. We're an insurance broker. A lot of you are familiar with us who have signed up, but we're an insurance broker primarily working with venture-backed companies. So we're very excited to partner and collaborate with Founders First as an alternative investment option. You know, many of our clients and the folks that we speak to every day may be seeing challenges in the VC space or maybe looking for alternative forms of investment. So for us to partner with a trusted resource there and provide that sort of access to talk to these folks and potentially seek some funding is invaluable to us and us servicing our clients. So we're very excited for this presentation today. Working with Casey, I think he's going to be able to share a lot of interesting insight and information about what sets Founders First apart and the kind of value that they can bring to our clients or really any company that's looking for some funding. So as to not bury the lead here, we can dive right in. We have Casey Estrada on the line, Managing Director of Investments at Founders First. I'll let you introduce yourself.
Thanks, Justin. I appreciate the intro. And again, we're really excited to be working with Founders Shield, and your portfolio of companies. Your product is invaluable to businesses, at these stages that we're working with. So very excited about the partnership here. And I'm very excited to talk more about Founders First. And what we're offering to small business entrepreneurs. I've been in this space for a number of years now. Most of my career has been helping businesses scale by providing direct access to capital. So, Founders First is unique in the marketplace, and excited to kind of go over what that looks like here.
Awesome. Well, perfect segue. Let's start with an easy one. Who is Founders First Capital?
Yeah, Founders First really comes from Kim Folsom, our CEO's experience as an entrepreneur. She's a 7-time entrepreneur. She's this is her 7th venture, and as what she plans to be her last venture, she's building an organization that's set up to help others that are trying to follow a similar path. So Founders First, we're a mission-driven organization that aims to add high-quality jobs in the marketplace by supporting businesses that struggle to gain access to capital due to gaps within the small business community. So we focus on helping businesses that are run by women, minorities, veterans, LGBTQ founders, and also businesses that are located in or servicing low to moderate income areas. The funding gap for these entrepreneurs is considerable, and so we're aiming to provide a bridge there. We accomplish our mission by providing education and mentorship by a number of accelerator programs and business coaching opportunities. But more specifically, we offer direct access to capital through a couple of very specific products. So a typical term loan, but also revenue-based financing. These are alternative debt options that are 100% non-dilutive, meaning the founders don't have to give up additional equity to receive funding. Our market is diverse-led companies with annual revenues from $500,000 up to about 10 million, or typically when companies can become bankable. And we look for businesses, even though we're industry agnostic, we're looking for businesses that are geared towards predictable or recurring or contracted revenue streams. So as a snapshot, we've supported over 600 small businesses. Of those, 60% plus have increased their revenue profits, have added recurring revenue streams, and hired high quality jobs. And over half have gone on to raise additional capital after working with us.
Awesome. So after speaking with you a little bit prior to this webinar, Casey, it seems like what Founders First is doing kind of fits into the middle, so to speak, of traditional debt or equity financing. So you mentioned revenue-based financing. What exactly is it? What makes it different from those more traditional sources? And before I throw it back to you, heads up to the audience here, we're going to throw up a few polls. One, who is currently fundraising or has recently raised funds? And then two, if you're speaking to VCs, have you found that landscape difficult? or have you found that there's kind of lack of VC funding out there right now? So that'll go up, Casey, as I throw it to you. And if everyone can participate and throw a few answers, and that'd be great.
Yeah, and Justin, you kind of hit the nail right on the head there. We are positioned between traditional, equity investments and debt options. So, the marketplace, if you think about it right now, a lot of businesses earlier on, they're not going to qualify for good quality bank debt, right? With the SBA, they might be too small or not have collateral needed. So on the debt side, a lot of the options available to small business owners at this stage are short-term, high interest, or working capital type facilities, right? And so on the other side, in order to get the larger check size, businesses are going to have to go through the jumping hoops of the equity process. So working with VCs, traditional institutional investors, can net those larger check sizes, but of course, the drawback there is having to give up equity in the business. So, we're trying to position ourselves right in between where, we can write those larger check sizes, but we can do so without requiring an equity component. So again, think larger check sizes, but friendlier debt situations where it's a longer payback period with the flexibility that revenue-based financing can provide. We'll jump into more specifics of the revenue-based financing here on the next slide. But essentially, what revenue-based financing is it's just a traditional loan with a monthly payback and a maturity date. But the payback and the amount we can provide are based off of revenue. So, as the business grow, you can qualify for more capital, and the monthly payback, instead of a fixed dollar amount, would be flexible based off of the cash flow of the business. We can go, there we go, next slide here. So again, we're trying to provide capital that allows for the best of equity and debt. Unlike other debt options, there's going to be limited financial covenants, and unlike equity, there's no loss of control or equity here. Because of our network, we're able to work with businesses outside of just providing capital. Think business coaching, networking opportunities, and other services that we're able to provide our businesses. Another benefit too is really the flexibility of revenue-based financing. So we'll get into some specific examples here in a couple more slides.
Cool. Thank you for everyone who participated in those surveys. Next one's also a little bit of an easy one, but I know that there's a bit of detail to share here, Casey. So who qualifies for funding with Founders First? I know from talking to you, it's not a set in stone kind of thing, but you guys have a certain specific appetite that you ideally look for.
Yeah, definitely. So, I think, again, there's the mission-driven component, right? And so we categorize that as with this list here: women-owned, minority-owned, veteran-owned, LGBTQ, but also companies that are located in low to moderate income areas, or those that are committed to diverse hiring practices. So, there is a diversity requirement, but it's a pretty broad definition. And then minimum requirements, we're looking for businesses that are doing at least 500,000 in annual, but more typically like $1 million, have been in business for at least 18 months. Outside of that, what is very helpful is for businesses that are generating predictable or recurring revenue. That can be like subscription-based businesses, contract-based businesses. Those are the type of businesses that are a good fit. I just want to highlight a few specific industries that we cannot work with. Just kind of a typical list there at the bottom, but businesses that do work best within our system, asset light or service-based businesses. A lot of lenders are going to require assets. One of the benefits of working with us is we don't require assets. In fact, a lot of our businesses are non-asset businesses. Companies with long-term contracts, again, we're really looking at the predictability and the recurring nature of the revenue. So to that point, software, SaaS or tech-enabled or tech-focused companies are all good fits, but also consulting companies, marketing agencies, and other types of consulting firms work really well. If there's an ongoing component with the customers that they work with over and over again, those typically work well for our funding methods.
Great. So this is how my mind works. When I get interested in something, the next question is, what's it typically cost? We'll get into after this repayment on a term loan, but specifically for revenue-based financing, how does that break down?
Yeah. So, just like an institutional investor or a VC, it's all about the return, right? Like, how much are we going to make for every dollar that we put in? Simple as that. The only difference is, with an equity investor, they're looking for a 5, 10, even 20x return on their money. We're looking for a much more modest range, right? So we're looking for like this shows our range. It's a 1.2x to maybe a 1.4x on the high end return on our capital. So just as a specific example, let's say a business is doing $1 million a year in revenue. Maybe we qualify them for $200,000. We'd structure that as a 3-year loan with a total repayback of $260,000 over those 3 years. So, and the way revenue-based financing works, again, instead of a fixed dollar amount as a monthly payment, we would assign, a specific, we call it a royalty rate that we would take off the, monthly revenue or the customer sales on a monthly basis. Always a single digit, typically on the lower end. So in this case, we would say we'd probably pick a percentage between 2 to 5% in order to get paid back, over those 3 years.
I want to sidetrack a little bit real quick before we move to the next slide. We spoke about this as well. I think there's some obvious uses of capital that is injected into a business, but I know there's some flexibility in terms of not restricting that like a VC may or something like that. If you want to speak to that real quick.
Yeah, we, at the end of the day, we want our money going towards growth initiatives, but that's a pretty broad use of funds. But look, we're writing larger check sizes. We have longer repayment terms. So it's a really good fit for businesses that are looking to put some money towards, immediate growth initiatives. So, if you're trying to make some key hires, or maybe there's some sales and marketing initiatives that you're trying to, launch, or even product developments, and you need this cash up front, it's a great solution for that because, you get that large check up front, and then you've got, for example, 3 years to pay it back. And the best part about revenue-based financing is it's going to scale with your business. So you'll see that growth, and we'll model that into our payments so that, it'll be, earlier on before you see those revenues grow, your payment's still going to be, on the smaller end as far as the dollar amount goes. So good question. Companies will still want to use our money for working capital or maybe having a cash cushion, and that's completely fine. And we're happy to adjust our terms or get creative to come up with a structure that makes sense. So, if it is a short-term solution, we could look at a shorter-term loan, for example.
Cool. Thanks for handling that curveball a little bit. When we look at this example and we see the principle out there, it kind of triggered that question for me, but that's great insight. We can move on to the next slide. Like I said, similar question, but in respects to term loans. Yeah,
definitely. And just to kind of like finish thoughts on your last question there too is, what we really try to do is qualify the business for as much as we can. We don't require a business to take that much, right? So in business, let's say we qualify a business for $1 million, but they don't have plans to be able to deploy $1 million for over the course of 3 or 6 months. We can scale that back. Let's start with $250,000 and then revisit in 3 to 6 months. So another benefit of working with us, right? We just want to get creative. We want to put out capital that is able to be deployed efficiently. Getting back to the term loan example here, as you can see, it's exactly the same. We're targeting the exact same returns. We have the exact same repayment length. The only thing that's different is the monthly payment. So this one's fixed. It'll be the same dollar amount every single month through those 3 years. So, a lot of entrepreneurs like to have that visibility into what that's going to be every month. And then some, prefer the flexibility of revenue-based where, it'll scale with the business as it grows.
Great. So we've learned a lot about what you guys are doing, what you're offering. My hope is that we can drive some interest for you guys, and I already have a few clients top of mind that I think would be good introductions and get some value out of speaking with you guys. But for those folks, how do we get started?
Yeah, we're really relationship based. So, I would say introductions to me or our team here, just to have that, initial conversation, talk about the needs of the business, make sure there's a good fit there, or for us to be able to answer any questions we have. But really, in order to get to a term sheet from us, it's a pretty quick review of some standard documents. And, I know Founder Shield companies work are mostly venture backed, so they're pros at working through diligence. Our lift's pretty light. We're just looking for a couple of years of financial statements. We want to see revenue by customer, debt schedule if there's any current debt, even projections. So pretty easy for us to be able to get to a term sheet after a quick review of those. But again, I want to go back to the relationship aspect. It's our job to work with these businesses to get to know the business and understand the needs.
Awesome. And on that, the relationship aspect of it, we take a similar approach. We're more than just an insurance broker. We like to support our clients in any way we can, including in working with folks like you guys. Outside of what you offer, why should somebody work with you guys over a different form of capital raising?
Yeah, so we touched on it a little bit at the beginning, but we started our organization with on the education and networking side, and we built out these amazing programs that we can offer. We do one-on-one business coaching. We've got a whole network of like-minded entrepreneurs that we're able to connect new entrepreneurs with, and so it's an ecosystem and an environment where that not a lot of lenders are able to provide. So from that aspect alone, it's worth checking us out. Even if you're not looking for capital, you can still sign up for the programs. Best part about our programs is that we have different programs depending on the size of the business, and we can put them on at no cost because we raise a bunch of money from large donor organizations that want to put their money towards entrepreneurial ventures. Outside of that, our results speak for themselves. The companies we work with, again, over 3/4 of increased revenue, 60% plus of increased profits. We've added almost 1,000 premium wage jobs, and that's premium wage jobs. So the companies will grow, and we've got the stats to prove it.
On that note, I think it's a good opportunity to roll over, and this is the next slide, to an actual success story and a little bit of a case study of how effective you guys can be as a partner.
Yeah, this one onshore is a really good example of what we've been able to do. So we do have a larger case study. I'd be happy to share that out with anyone who wants to get into the details of this one. But Valerie is somebody that we've been working with for a while. She's gone through our programs. We identified what her needs were in her business. A couple of things. Well, she wanted to capitalize on some IP. She needed to buy that IP. She provides basically a platform for pharmaceutical companies to have their have new drugs go through like the approval process. So we were able to provide her $250,000, and was able to match that with a partner lender of ours for another $250,000. And in total, we got our $500,000 as revenue-based financing. If we go to the next slide here, kind of see what her results were. So again, she was able to acquire the source code to help her really be able to capture and release her application. She made some key hires to her team. In the first year alone, she increased her revenue by 1.5x. And what's been really cool is like because of the capital she took from us and the growth that she had seen, she had been recognized by the Inc. 5000 for the last 2 years, and is being considered again for this year. So another good story about this one is we're in current talks with her to figure out what's the next step, how much more capital do you need. She'll be a great candidate for us to continue to fund, so that she doesn't have to go out and dilute the business to get some larger check sizes. So onshore, great example. Again, happy to share a larger case study for anybody that's interested.
Awesome. Yeah, it's great to see this sort of success story here, especially. I think it's no secret that the VC landscape as of late has been a little bit of a rocky one to navigate. So seeing a success story and working with you guys as an alternative funding source and how you approach things and seeing it put into practice and the results of that is really great. And we can jump into some questions and answers, some questions here that we can help answer. But Casey, appreciate the time and the insight. Really excited we were able to get you on here and provide a little bit of insight to some of our clients at Founder Shield.
Absolutely. Yeah, definitely appreciate the time.
I do not see any questions in the Q&A, so
I've
go
got
ahead.
2.
Awesome.
So the first one, you mentioned working with diverse founders for funding. Do you only finance diverse-led companies, or are there exceptions for that?
Yeah, we use the term diverse, but really it's a pretty broad range of folks that will fund. So outside of just racial diversity, women-owned businesses, veteran-owned, LGBTQ businesses that are serving low to moderate income areas. But really, we've got a large fund, and we do have a carve out to be able to fund any and everybody, as long as they fit kind of our business profile.
Great. And then the next question was around profitability. So you mentioned that you don't have to be profitable to get funding. Do you have to then put up collateral, or are there other things in place to counteract the lack of profitability? It's
one of the unique features of revenue-based financing is, we don't have to see a business as profitable. A lot of businesses that take equity money, they take that money so they can go into burn mode, into growth mode, right? So we understand that eventually, even though they're burning money now, there's this pathway to get to profitability. So as long as we can, make sense of the pathway to profitability, we can get comfortable with businesses that, to be able to provide a loan, even if they're not yet profitable. So yeah, we don't like to let that be a hurdle, considering, we want to work with, we like working with venture-backed businesses. And again, I don't want anyone to think that we're, solely an alternative to VC or institutional money. If that's the route that a business is going, we're happy to work alongside, or even before equity money comes in. We can be a good complement. It's sometimes businesses we work with will will have a set amount of money that they're trying to raise. But if they could stack some debt into the mix to help, preserve some of that equity, then it's a good use case for us as well.
Great. Well, those were the only questions that came in.
Great. Well, we'll throw some contact information up here. I'm sure we have an attendee list, and we'll follow up and make sure we're connected with everybody. You can always reach out directly to me. I know a lot of you folks have worked with Justin before too. We're connected now. You could always reach out to Justin and ask for an intro. We're just really thankful and appreciative of the recent relationship with Founders Shield. We love what you're doing in the marketplace for similar businesses that we're working with. Again, thank you so much for the time today.
Of course. Thanks, Casey. Again, really appreciate the insight. I hope everybody found it useful and informative. I think we can wrap it up. Last call out here. Casey's information is on the screen. Feel free to reach out to me. I can also connect you guys. But I hope everybody has a good day and appreciate everybody's time.
Great. Thanks, everybody.
Thanks, everybody.
Bye.